Hi, everyone. As they say, GM. Hi, Henrik.
Good morning.
How are things over in Melbourne?
Very good. Very good. Um, yeah, finally spring is here.
Yeah, spring in the metaverse also not too bad. Kelvin Ruby is joining. Awesome. All right. We'll wait for a couple minutes just for more people to drop in and get started. Awesome. Jordan joined us. Good morning.
Morning.
All right, trying to sort out just Calvin and Ruby, and probably Convex will drop in shortly. In the meantime, until then, maybe we can get started with a short self-introduction. So I will start. I'm Daniel. Been contributing to dHEDGE DAO since about 1 year ago, and worked across growing the ecosystem and growth from APAC and other initiatives in dHEDGE, like campaigns that we were running, and generally been in the crypto space for the past few years in different areas. DeFi has been a major area, and DAOs, and more recently I learned to be a JPEG collector and quite excited about it. And I'll nominate Henrik.
Yeah, sure. Good morning, everyone. My name is Henrik. I'm one of the co-founders of dHEDGE. I'm also a co-founder of MStable, and I manage a crypto fund here in Australia that is called Apollo Capital. Excited to be here today. And I'll nominate Jordan.
Yeah, hey everyone. Jordan here. I'm a core contributor at Synthetix. And as of a couple of hours ago, on the inaugural Treasury Council in Synthetix as well. And also a co-founder of Block Owner, which is a custodial and regulated interface which connects the mass market to Aave and Compound. Let's see who else is here. Hand it over to Ruby.
Hey, morning everyone. This is Ruby from Incuba Alpha. We're a fund focused on early stage investment on DeFi, Web3, and DAOs with outreach in China and Japan. Happy to be here. And next, I think I hand over to Calvin.
I think we might have issues with Calvin. His handle is still on listening. All right, speaker, welcome, Calvin, GM. Does it work, Calvin? Okay. Okay, so while Calvin's mic is being sorted, I'll give Calvin a very short intro. Calvin has been leading quite a few incubation initiatives in Binance research over the past few years, and more recently has started Impossible Finance. So innovating on how projects in DeFi are being launched and all kind of exciting things there that hopefully we'll be hearing a bit more about from Calvin once technical challenges are sorted. And I guess we can kick it off. So I think that last time we checked in on dHEDGE Spaces, it was in the midst of the crab market, and it was initially started as everyone thinking that it's going to be a bear market, and quite fast turned into a resurgence of growth with quite a lot of activity in multi-chain space. And we'll jump straight into some of the things that we've seen both in dHEDGE and in the other projects where speakers come from today shortly. But I see Calvin has rejoined. Can you speak? Does it work? Still some technical challenges. I guess maybe it's because we're not only Bitcoiners and Jack from Twitter is against us or something. Just kidding. All right. So I guess maybe first question that I really
guys,
wanted
can you hear me now?
All right. Yeah, it's working. Yeah.
Yes, clear.
Hello?
Yeah, feel free to
Calvin,
give a quick intro, Calvin.
Doesn't seem like it. Yes?
Yep.
I can hear you. Can you hear me?
Somehow I don't hear anybody else. I feel like I'm alone here. But I guess based on the text transcription on the website, I guess you guys can hear me. So I guess I'll give it a go. Hey guys, Calvin here, core builder at Impossible Finance. I think Henrik was kind of mentioning, someone was mentioning, maybe it was Daniel, just kind of the direction of the markets being, a little uncertain. But I think the great thing about all the speakers that we have here today is, I think we're all incessant builders. We don't just want to just do one thing, but just want to keep trying to create new stuff within this space and try and solve any of the kind of market pain points that we've seen, so that we know that we're in the best position to give users what they need if and when markets continue to kind of pick up and people realize the power of DeFi, that we'll be able to hopefully have all the things necessary for the next wave of new DeFi users to come into this space. Yeah.
Awesome. Thanks for sharing, Calvin. All right, so jumping straight to it, I think that one of the really exciting things that we've seen with dHEDGE V2 is moving from Ethereum as layer one to Polygon suddenly meant that gas costs are no longer major considerations for the managers. And we've seen that the user patterns for managers have changed. So maybe, Henrik, can you share on the observation that you've seen and from an active fund management point of view on dHEDGE, what were kind of the interesting stuff that you observed?
Yeah, for sure. So, yeah, I think this is, part of a bigger picture here, I guess, with what we're talking about today with the L2s and multi-chain and different platforms coming to the market. Really enables, I think, different use cases for DeFi in general, because I think on Ethereum L1, obviously it's quite expensive, and it was really kind of DeFi for whales. So moving to things like Arbitrum, Optimus, Polygon, it really enables different use cases, and it also opens up DeFi for smaller players, which is sort of the whole point with DeFi, right? To democratize investing. So I think that's really great, and yeah, we've definitely seen that with dHEDGE as well. You can run a much smaller pool on dHEDGE, and it's still profitable to trade as a manager. You don't really have to think about the gas cost and the cost of trading, so you can really express exactly what you want to do at any time. It just unleashes many more use cases, I think. And yeah, for dHEDGE specifically, it just means that you can be much more active, you can trade anytime, and you don't really have to think about gas costs while doing that. I'm really excited about that, and I think that's the next big phase sort of in DeFi that with Polygon, but also with the L2s coming now, that really enables anyone to participate, and many more use cases as well.
Epic, yeah. I remember that at one point during that competition, we started seeing that there were particularly two managers there that just traded in and out very fast, very frequent. And these were very different kind of patterns that we've seen on V1. So it was really interesting to see how swing trades suddenly are open. It was quite exciting to see. And those two managers really got to their top performance as well. So it kind of proved itself as a great thing to have happen. I guess maybe shifting to, you briefly mentioned Arbitrum and Optimism, and I know that Synthetix has been one of the key drivers to be early adopters of Optimism, and originally dHEDGE was also planning to, but given that we kind of really felt like we want to cater quite fast to the demand, we ended up first starting with Polygon. I'm interested to hear, Jordan, from the recent developments with Optimism. How do you guys how is it going, and what did you see as most exciting features or updates in that area?
Yeah, I think the first thing to point out is that most of these steps for us are, I guess, baby steps. We're moving, relatively slowly. In our case, liquidity is still mostly on L1, but slowly moving more liquidity over onto L2. The experience for us has been interesting. I think it certainly hasn't been as quick or as fast of a transition as we initially expected. But that's also, I guess, somewhat of a product of being super early. The space is already very nascent anyway, but the L2 environments are even more sort of immature and obviously at the beginning of their journeys. So, the developer experience itself is challenging. The tooling is obviously needs to be improved as well. But for us, the actual the sort of the design space of the product itself becomes much more, practical for in an L2 environment. So we have issues and challenges on L1 that will be resolved on L2 because of the throughput. So for us, I think the most exciting thing, once we get over this sort of migration or kind of this process of kind of fully launching is kind of the opportunity for the product to really to compete with centralized solutions. So being able to kind of create products that are actually on par with other derivatives exchanges, for example, in the centralized space is probably the biggest upside that we'll get.
Epic, yeah. And also, recently there's quite a few exciting new products that came out of the Synthetix community, right? So, how does that all come together in a multi-chain world? Is it all going to be deployed on Optimism and seamlessly kind of work with each other, or are they still some of them going to be on L1 and
seamlessly, Daniel? They're going to all work seamlessly together. That's exactly what they're going to do.
Just as everything in crypto, right?
Just as everything in crypto, that's right. So I mean, each of these projects, they have their own communities, and those communities will decide on exactly how the product's roadmap evolves and where they will be and where they won't be. But clearly, Optimism for us is a Schelling point for where we want a lot of developer communities to be, and where these communities will end up kind of converging, we hope. Lyra, for example, is sort of natively built on Optimism, which is great. Thales is still on L1, but looking to move to Optimism after the next regenesis, which is at the end of October. And so we've got sort of, I guess, we've kind of got a Schelling point for people to kind of move towards, which is a good start. But I think the overall challenge of L1 versus L2, fragmentation of liquidity, as well as sort of the competition with other L2s as well, is obviously like it's an open question for everyone in the space.
Yeah, that's really fair. I think that in many ways people observe Optimism as the somewhat officially endorsed scaling solution that the Ethereum Foundation has the back of, given that there's Carl and Jinglan that came out of working closely with Foundation. And I've noticed that it was really nice to see how even with the somewhat competition between Arbitrum and Optimism, everyone just are having this camaraderie of working through the challenges of birthing a new scaling solution. And generally, people are really excited to support each other, experiment, and it's really great. Maybe to shift to some of the trends that we're seeing in this multi-chain and maybe both on Arbitrum and others. Convex, which just joined. So if you're happy to give a quick self-introduction and then also share with us what are the latest, most advanced dHEDGE stuff that we're seeing in DeFi these days.
Was it?
Yes, Convex.
Cut out. Hi. Stuff at the moment has been probably off ETH on some of the other chains. So, Avalanche, obviously, there's been a ton of like DJ yield farming stuff going on there. There's been a bit on Cosmos as well. So Cosmos has been kind of couple like plus 300% farms there. And Solana's had, a few ones as well that have been pretty decent. In ETH, what's been good in ETH lately? Let me think. Do you like stable farm? I mean, if you're looking at farms with coins like NIL, then there's plenty of stuff that's been quite high. Stable farms lately, I mean, you've been able to get kind of plus 50% on Convex.
using MIM. The MIM pool was quite incentivized after the bribes. That's probably been the best one that I can think of right now in terms of dHEDGE and yield farming. I mean, there's obviously been a ton of stuff. There was that 9 one on Arbitrum, which was quite high as well. I mean, staking on Synthetix has been pretty good as well on Layer 2 lately, if you like the coin.
All right, that's like a super quick recap on probably a lot of projects that are really doing well recently. So thanks for sharing that. Something that I think would be really interesting to hear, Calvin and Ruby, both of you I know are very involved in the intersection between Asia and the West. And I think if you can share what's the observation that you've seen in the trend of going through some increase in regulatory clampdown in China as well as the US, and how it kind of influenced the macro dynamics on the DeFi ecosystem. All right, I see that Ruby has technical issues. Let's try resolve it. Jordan, you in the meantime, you wanted to respond to some of the comments there?
Well, I was just going to say, forget the stablecoin APYs, mate. Like, talk to us about 500% APY plus. We're all degens over here.
Well, I want to know what the Lyra APY is going to come out as.
Yes, that's an open question.
Cool.
Something good. I mean, the DopeX farms have been quite good. Like the DopeX ETH farm's been like a few 100% since the very start. I mean, obviously the token's moved a long way now, but that one's been pretty good. The nine cat thing was obviously ridiculously high on Arbitrum for a fair while as well. On Cosmos, the one I was referring to was the Atom Osmosis farm, which has been a few 100% for a while now on there.
Hey guys, can you hear me right
hey,
now?
Ruby, yeah, we can hear you.
Yeah. Can you hear me right now, guys?
Yeah, we can hear you.
Okay, cool. Somehow I cannot hear anyone else, but yeah, I heard about the question regarding the regulatory from Asia. I think from my perspective, taken into two sides. One is for the users and the traders. Most of the policy have been taken into consideration. I think far away. I think at least half a year away. So people are not surprised with what the regulators coming out, and the majority of the DeFi users have already used to the protocols interaction with the wallets and the decentralized protocols. So I have to say that the users are ready to move to the decentralized world. But on the other side, to the builders and the startups and entrepreneurs especially in China, I think they are facing more push to put themselves into decentralized. So there is definitely only two ways. One, that you fully comply with the regulations and go compliance and finish all the things talking with the regulators, or you just go fully decentralized. There's no middle way anymore for those founders. And I think very good contributors and builders are moving themselves outside of mainline, but still remain themselves as a builder in the DeFi ecosystem to be innovative.
Yeah, that's interesting because I noticed also that one of the main...
I think, that's all about me.
Like one of the things that I heard from quite a few friends in China, and I saw the trend right after the recent FUD, and it's debatable what's the actual truth in it or not, but suddenly you saw both Sushi and Uni as had a spike in valuation, just like a market price movement there. And some of it was attributed to the fact that CeFi has suffered. So that was interesting to see as a response. And yeah, I think once that stage of regulations and response to them become more clear, it seems like we'll enter a new era of DeFi, that things are going to be much more decentralized. So currently, a lot of projects are still using admin keys or stuff like that. Now, with being exposed to regulatory risk, it looks like this would be another front to start covering. So I wonder, as builders, what is the kind of measures that we're taking to protect? And Jordan, if you can speak to that, and Henrik as well, like, on what are the plans with regard to further decentralizing, and what were the discussions on that strategy?
Yeah, so I mean, I think the best way to go about, I guess, this new regulatory environment is to be legitimately decentralized and make sure that the DAOs themselves and the communities around those DAOs and the governance decisions are structured and built in a way that are anti-fragile. And I think, like, as an example, Synthetix is very much a DAO first model. We've worked really hard in terms of making sure that those areas have been thought about and then executed in a way that there is no centralization, or at least broadly no centralization. So I mean, that's really the best response, right? That it's to kind of fulfill the promise of what DAOs are supposed to be and what decentralized projects are supposed to be, and to follow through with the theory and practice.
Yeah, I agree with what Jordan said there, and I think for dHEDGE we took a lot of inspiration from Synthetix, and we have continued to take inspirations from Synthetix, and I think we were sort of DAO first from the beginning. We obviously launched much later than Synthetix, so it was possible to be more decentralized from the beginning. But even so, it's still a process, right? And I think during this year we made some really good improvements in kind of adopting a more a solid framework for governance with upgrade proposals and so on. So yeah, I agree with what Jordan said.
Cheers. Yeah, I think it's basically always pushing the ecosystem to improve, and I think now with the tools for governance, for example, there's more and more tools that are helping people get clarity on how processes are run. Actually, Edson here is in the crowd, and Edson has been introducing really awesome and robust framework to go through proposals. There's different categories, and kind of resembling the EIP flow in Ethereum. So we've recently been able to introduce those things following guidance that Edson kind of drafted. We already see that it got quite good result on how things are done in dHEDGE. I think one interesting thing with regard to, if we're talking about cross-chain and the level of decentralization, there's always some kind of pains of being a young ecosystem. And recently we have seen how there were outages for both Arbitrum and Solana. So I'd be happy if Ruby, if you can speak to what were the kind of concerns, or what were the lessons that we learned from that. Oh, Ruby, can you hear me?
I can say something if you want while we're waiting. While
yeah,
Ruby's sorting
definitely.
the tech issues out. I mean, the Solana one, obviously it was not good. I mean, obviously the apps, any sort of outages like that are suboptimal, especially when compared to chains that don't have those kinds of issues. I do think it kind of naturally comes with like stuff that's still fairly early stage and hasn't been around for as long. So, I think like for Solana at least, it certainly took the wind out of its sails, and I think it's contributed to its somewhat contributed to the weakness or the underperformance it's had since that date. I mean, I don't think it's terminal or anything like that. Like, people will forget about it and move on. They probably already have. On the day, I thought, it was a good tradable event on the day because, there was some obvious longs you could do around, like, when it was restarting and that kind of jazz, and like where spot should be such that there weren't any like on-chain liquidations. Like, there's a pretty high chance that spot would and higher at that point, I think, on the restart. So like on the day, there were some opportunities around it. But like, I think structurally it's been an impediment, like for the short term, but long term, I think, like everything, people will forget about it and move on with their lives. I'll go back on mute.
Yeah, no, I think it's interesting. And even Ethereum, that today we're all like taking it as a very stable and huge network. There were the Shanghai attacks back in 2016, right before the Shanghai DevCon. There was the DAO hack, which was a major issue. So I think that it's not only like these outages that are, of course, like suboptimal and not great, but it's in general the experiences of growing a completely new ecosystem and the game theoretic risks that come there. So I think it's a part of being pioneers, and it's great to see that the community kind of rallies after the recovery and keeps supportive and continues building and, I guess, growing. It's almost feeling like nothing can really stop crypto at this point. It's just became like a talent sink and capital sink of magnitude that I think hasn't been seen before. Maybe something interesting.
Please don't jinx us.
Okay, I'll try not to jinx further, right? Maybe something interesting to hear from speakers today is there's quite a lot of bridges and different ways to go cross-chain. So what are the kind of most useful either tools or most useful like Lego blocks of this multi-chain world that you're seeing, and how do you see it developing? So yeah, if you can share your observation on that, Ruby or Henrik.
Hey, thanks, Daniel. Finally, sorry, there's some technical issue before. Yeah, we've seen quite a few like interesting bridges trying to link up multi-chain universe here. We are using C bridge and NSWA for a while, and I think though there has been some challenging regarding the technical and safety issue, but we are expecting more and more like decentralized bridges to link up the liquidities among different chains and the layer 2s. And actually it brings really good arbitrage opportunities as well. We've seen that Tether stables or like ETH Arbitrum is slightly a little bit like underwater compared to what on the main chain, but people are expecting it will go back to the benchmark when more liquidity is among the layer 2. So there are definitely good opportunities to ARB, and with the scalability on layer 2 is cheaper for the traders and farmers to do position adjustment on layer 2, and with the support of cross-chain liquidity over there's more and more trading strategies coming out. And also I think we're expecting more wallets to integrate with native bridges into their apps to make a more centralized experience for the users to do cross-chain liquidity within the wallet, and it also within the different applications. So we're expecting to see that our positions on dHEDGE could be conveniently moving without the mention of Polygon with the support of some of the wallet integration, and users are able to experience smoothly among multi-chains with the support of wallets and the bridges in the near future.
Cool. Yeah, one of the recent trending memes I noticed is bridges. So there's, first of all, so many bridges, and a lot of people are seeing bridges as both massive opportunities to offer different products and integrate different products, as well as honeypots for attacks. Calvin, I see that you're able to join, so if you're happy to take it and share your view on that. I know that you've been also quite early in cross-chain and bridges with Binance Smart Chain at the time.
Yeah, can you guys hear me?
Yes, you can be heard.
Awesome. Yeah, so I do think your honeypot comment is spot on. I think in the wake of the Poly network attacks a few weeks or maybe a month ago now, it's definitely not something to take lightly. And I think it's also similar to what everyone was talking about, how decentralized it can be, in the entire space. That I do think that bridges themselves also they come with a lot of responsibility. And so whether it's, some of the most trusted setups currently out there or ones that are more fully decentralized users right now, they just want to be able to move funds, as quickly as possible, right? I think Ruby and I were talking about how a lot of people aren't using any Solana bridges. They use directly FTX to bridge funds from, let's say, ETH to Solana. So instead of using like a decentralized way to move, let's say, USDC, you might just simply deposit into an exchange like FTX and then take out, say, an SPL token to start farming something inside Solana, right? So I think right now users are in a state where it's really an ends to a mean. Whatever gets the job done, even if it's not the most decentralized, the most cheap, they're just gonna pick the thing that's maybe the most easy right now. But as I think there's more education and more options presented for users, slowly but surely, I think more teams and more folks will start using these decentralized options. And if there will be more kind of volume or throughput that happens via these bridges, it will be really tantamount that we get as much audits and eyeballs around all of these various bridges, given that they essentially are also potentially the getaway car for let's say any exploits that happen within certain chains, and that we obviously want to make sure that these bridges are used much more to help the average user have some more freedom of money within the multi-chain space, rather than that getaway car for some black hat hacker, right?
Yeah, that's really interesting point you mentioned, that basically people are using exchanges and as a way to switch between networks. I mean, that has been already around always, and I think that we're still in that world where CeFi is kind of a training wheels to a completely sovereign, self-custodial world. But until then, yeah, absolutely right. Centralized solutions are oftentimes more robust and more affordable. It does bring a question that I think is really interesting. There's always this kind of dichotomy between what do people want to see as private and how to preserve privacy versus what are the things that we're actually interested to leave as on-chain trails. And I think that one of the even more fascinating things that happen in this space is NFTs. I mean, here I see that both Henrik and me are the Abby Dabbies, Jordan is the punk, Ruby is the people punks, and everyone here I see is starting to adopt it. And there's also DAOs and funds that are starting to own NFTs. So the provenance of NFTs is already something that is very important. I think that someone from the Pleaser DAO was saying that a part of the value attribution to NFTs is who actually holds it. So you want to see that trail. Yeah, Henrik, if you can share the observation from what are the values of NFTs and the role they play in portfolios and in general in how it evolves into becoming kind of merged DeFi and art and NFT together.
Yeah, hi. So yeah, I'm definitely not an expert in the NFT markets. I think Daniel and CM, you have played around with NFTs much more than I have. Obviously, we've seen a huge rise among kind of a few different verticals when it comes to NFTs. So one is digital art, obviously, and I think part of that is collectibles and the CryptoPunks and all that. And then you have the sports collectibles, which NBA Top Shot was the big success there so far. And then you have sort of in-game items as well, right? So you have things like Axie Infinity and things like that, right? So you can, I think, as an investor in the space, you can focus on the NFT assets themselves. Some people would argue those are not really crypto assets. Because you can put anything on the blockchain, right? And you can put digital art on the blockchain, but that doesn't really mean that they're crypto assets. But they're powered by crypto, and that's the most important thing, right? So, me as an investor, I look more at the infrastructure plays, and there are a few coming, right? One are these play to earn DAOs, which I think is really interesting. Other than that, the infrastructure is mostly centered around marketplaces, and sort of the chains themselves, and if it's Ethereum or whatever, or what have you, or more specific NFT blockchains like Flow, for example. So that's my sort of very high 10,000 mile view of the market, but maybe CM or Daniel, you have more.
Yes.
Sure.
CM is the main alpha leaker here.
Yeah,
so
exactly.
Please share with us your pearls.
What do I think? I think you can separate NFTs into three categories. One, like your one of ones, or like one of tens, where there's not that many of them, generally by high profile people. Yeah, and you've got your 100 to 10K profile pick minting projects, and then you've got your what would I call it? Like NFTs with a use case, or like NFTs that generate a yield. So where you want to play in them really just depends. I mean, I think for most people, if they can get on Nansen and follow some good accounts and put a small amount of money into minting some things and try and run it up, that's how most people have built a lot of stacks. Those with a bit more money have made good money on things like punks, and one-of-one stuff by artists who are well known, or punting on one-of-one things that are owned by collectors that are well known but that aren't expensive yet, in the hope that at some point they'll get shielded or picked up. And then the other stuff I would put in basket would be stuff like NFTs that you can use for something or earn a yield on. So Zed Run horses would be an example, where you can race them and earn money, or you can breed them and make money from the stallions, or sell the progeny from the mares for ETH. Or another one would be, I had another one in my mind, but I just forgotten what it was. But another one would be Parallel, which I obviously have I have big bags of both of these NFTs. Parallel, you'll be able to earn the native token via certain NFTs in the ecosystem, or earn yield on the cards as they get traded. And I guess there's other ones out there as well that will be used for playing. I'm sure Illuvium is another one that everyone's familiar with.
What's the name
Axes.
of the project you were mentioning?
Which one?
Power L. What was it?
Oh, Parallel.
Parallel.
Yeah. Parallel Life. So that's 4 projects in Axie, Illuvium. So that's the last class of NFTs that I would say. And I generally think that I think picking the top in the NFTs is kind of a fool's game, because you have no idea. There's very little liquidity. There are some things you can watch out for, generally speaking. But it's very hard to know when it tops and bottoms, and it's very reflexive. So generally people should either just put money in that they can afford to lose, or buy NFTs that they think can earn a yield for them. So if the arse falls out of it, then at least you'll be able to get your money back over time.
Yeah, the design space for NFTs, I think, is really only starting. Like, I think in many ways, people share the 10,000 units of NFT collection, those that basically kind of followed the punks model. Many people are looking at it as somewhat of a similar to the ICO 2017 thing, that everyone's just trying to do a similar kind of fork with relatively not too much effort. But I think that just like 2017, it will actually result in quite a lot of innovation in the long term. Actually, I was lucky to recently have found a punk that I claimed in the, I think, second day after the Larva Labs launched the project. And now I think what we're seeing is quite a lot of specialized NFT infrastructure. So there's projects that I've seen that are looking at creating automatically a market out of any NFT. So having every NFT with its augmented bonding curve, and we've seen already early examples, some successful, of fractionalized NFTs, and how people are able to, by that, share very very meaningful pieces of art and internet culture. In dHEDGE as well, there's actually quite a bit of NFT experimentation that we've been doing with badges and prizes for some of the top performing managers. Taminator has been working with Galaxy, and that actually the Galaxy crew has been getting really good traction in the ecosystem. Yeah, have you guys been playing with NFTs much, Jordan, in Synthetix ecosystem?
Not in any substantial way, no. We're working with Universe or XYZ Universe on doing something through the Grant style, but yeah, our focus has not really been in that space itself. And despite my profile pic, I'm also not super deep on it. You know, been trying to just to focus on the things that are I guess OG, and kind of strategy is not only is it a fun space to play in, but also I think you know, a lot of it is about I guess, you know, trying to follow trends, which is its own thing. You know, I think there's a lot of noise in the space, so yeah, it's quite difficult to follow NFTs in any real depth, as well as DeFi, as well as building products, etc. So I just generally lean on some of the other panelists and try to play along.
Epic. Still a punk OG, which is already an elite class of its own. So, you know, you get that one at least. Cool. I guess we're nearing the end, but we still have another 10 minutes, which I think what would be great is to throw out there maybe 2 questions or 2.5 questions. One thing that that I've been thinking of recently is, right now crypto is at 2 trillion roughly market cap, and we're seeing how already the impact and influence that the community has is significantly greater than it was, say, in previous cycle. That's something that we're seeing with how much regulators are being occupied with keeping up, and all the kind of aspects that this brings, the tensions, as well as the positive things. Just the amount of talent that is defecting Web 2 to Web 3 is really impressive. So I want to put forward a hypothetical question. What would the world look like when we reach crypto market cap of 10 trillion? And what would it look like when we reach crypto market cap of 100 trillion? And of course, like, let's ignore for 1 second the fact that fiat is not really meaningful, those figures, because fiat is going down, but just as what would the impact of crypto wealth be on the world in the 10 trillion or 100 trillion dollar cap? So any takers?
I'll jump in quickly. So I think at 10, I don't think there's a huge difference to what we have now, which is, reasonable traction, but still quite an early adopter style space. I don't think 5x from here is like a huge step change. I think at 100 though, just looking at it from one perspective, that really means that we've gone to the next tier in terms of adoption. And I think adoption is like the interesting point, right? Like, what does adoption mean? What are the entry points necessary for us to get to that level? I would argue that there's going to be a lot of centralized solutions that plug into these protocols rather than necessarily asking, 100 to 200 million users to come in at, playing around with MetaMask and hardware wallets and things like that. So I think crypto will look different at different layers. And I think one of the most impactful layers is going to be the user experience element, right? The way that we wrap some of these difficult to access and also difficult to understand components of crypto and present them to the mass market in a way that's much easier for them to not only access but to understand. So I think if we're going to get to 100, you don't get to 100 trillion, I don't think, by onboarding people into MetaMask. I think you get to 100 trillion by creating interfaces.
Yeah,
and I'll just toss in that at 10, you're kind of on that cusp of like everyone is aware. You've got DeFi users all over. People are flooding into centralized exchanges. But yeah, when you get to that 100 mark, it's kind of we start to get on that bridge of, okay, this is something that could totally, be the new system as we know it. That's the point where we get to where the technology and the interfaces and the integrations are at a point where, I mean, we kind of meme around being bankless now, but that's where the point of being bankless is actually, like, I think truly possible, to the point where it's so integrated with payments from on all sources, on corporate and business structure, all the way down to the individual level of just buying coffee, into the point of being able to run all of your financial transactions and operate anything that you could want to do all on chain. And I think the coolest part is a lot of us here probably already kind of live our lives, if you will, on chain. And I think when we get to 10, a lot more of us will be. And then, closer to 100 is where this kind of sounds crazy, but the whole kind of world starts to operate on chain when it comes to identity, their finances, their collectibles, their gaming. I mean, those are the concepts that are available now. But that kind of paradigm shift occurs at that level where, well, obviously there's no going back, but it's only a matter of how much longer until everybody is kind of living on chain. And that world is, I guess, for us to imagine now, but for us to continue to kind of build towards.
Cool. Thanks, Andy. Anyone else?
Yeah, I can add something about the living on chain part, because recently it's really interesting that me and my friends starting to send small transactions on there too for our daily lives. We just want to go sports and have some settlement, have some settlement to pay there. And my friends, I said I can pay you in stable, and my friend said that, well, which one do you want to use? You want to use Arbitrum or Polygon? So it's starting to change our life already with the scalability coming on. We can send 200 something stables to each other just to settle our daily transaction fees. And I think long-term wise we're seeing a lot of the good sign here. We're seeing is that we see a lot of builders coming in from TriFi, from the Web2 environments, and from those big tech companies, either as advisor or as full-time builders. So we've seen a large trend of builders coming in and a lot of innovative coming. And the most fantastic thing about crypto is that we have strong reflexive mechanism here. So even though we are about to enter into another bear cycle again, we are expecting more and more people to hold and builders, because people see what happens in the last cycle, those stay here or those continue to have gained already a lot. And so I think the whole industry and the adoption is just growing more and more robust, and the volatility may be lower for this cycle as a bear compared to the last one.
Did we lose Daniel?
I think maybe.
I think so, maybe.
Mm.
I just to add one thing on this subject.
Oh, yeah, he's got mic issues, I think.
Yeah, okay. Actually wrote a tweet storm kind of related to this yesterday. How to reach sort of 10 billion or 10 trillion or 100 trillion. I think, what will need to happen is that you will blur the lines between centralized finance and traditional finance and DeFi, right? So instead of the institutionalization of crypto like everyone has been talking about, you might actually see the blurring of the lines between centralized exchanges and DeFi. You will see centralized exchanges starting to tap into the liquidity of DeFi. So that's kind of a first step. And then you probably will have fintechs tapping into the yields of the likes of Aave and other platforms to earn those kind of yields. So you'll see, I think what Jordan was sort of talking about as well, that you will see this kind of traditional financial institutions and fintechs starting to tap into DeFi and other markets, and that's probably how that will happen, in my view.
And I think real quick, go ahead, Sam.
No, I was going to say, like, if you get a scenario, like how the world evolves and looks probably depends a little bit on how like theoretically in this hypothetical at least, how the value is split between different things. Like if it's, if it goes to X trillion and it's all in BTC, the world is probably looking like a very different place to if it goes to X trillion and it's all in DeFi, or if it goes to X trillion and it's kind of spread equally across a bunch of different sectors within the space. So I think how it all evolves will depend a bit on how it looks will depend a bit on how the world evolves over time.
Hey guys, sorry I might have joined the conversation a bit late, but just to add on what CM said, I think before we even get to that point, we kind of need to perfect the layer 0 of things, in the sense that where are all these blockchains going to be hosted on? And that's probably going to be a bridge of some sort. That's a protocol that's network agnostic to be able to move between. So I think that's probably, and that's like the market structure that we're entering into, right? We have all of these bridges popping up here or there. But before we get to a world where TradFi, DeFi, and all of these chains can kind of connect, and these different worlds could connect, I think we need to connect the DeFi world first. That's probably going to be the next wave, the wave of bridges. And yeah, some of my partners and I, we're also building some bridge stuff. But yeah, just wanted to add that point.
Cheers. All right. I think I'm back. Can you guys hear me?
Yep.
All right. Thanks, guys, for going with the whim on what would the world look like at these scales, and how do we get there, Henrik, with your melting the boundaries between CeFi and TradFi and DeFi. I think this is really interesting, that observation that this would need to happen. We'll start wrapping up, I guess. I'll just leave my 2 notes on that. I think that actually at 10 trillion, which is only the 5x, we definitely will see a massive change. I think at 10 trillion, we'll already see how big tech companies, whether it's the Apple, Facebook, Amazon, WeChat, etc., are already going to be, there's going to be like crypto networks and DAOs that are at the scale that is disrupting this kind of organizations. So whether it's infrastructure related, hardware, etc., this is already going to be like crypto wealth is going to influence those sectors heavily at the 10 trillion mark. And I think at the 100 trillion mark, crypto wealth is already going to disrupt the legacy nation state structures and everything as we know it. So just kind of like what Andy was mentioning on a full life on chain or something. I think it's more like it's already going to be so big that it would be integrated into so many aspects of our life. I guess before we're wrapping up, anyone wants to share any observations and insights into the multi-chain world and experiences?
Well, I was going to say, Daniel, just on your last comment, you know, if that is actually the case, and you know, we're disrupting nation states, as you put it, let's hope that we're building something better and not mistakenly building something worse.
Yeah, let's build it intentionally and indeed to be more inclusive and build a better world. All right.
Cool. Thanks, everyone.
Cheers. Thanks for joining and looking forward for next time.
Thanks for hosting.
Thank you.
See you guys.
Thanks.
See ya.
Thanks, guys.